Hello everyone, I'm Marty and welcome to the March 2022 Market Update. I'm going to jump right into it today. As most of my regular subscribers know, the metric I use to determine how active the market is called the sales ratio. And basically all the sales ratio is the absorption rate of product into the market. How quickly is it selling in a given month? If less than 11% of the inventory is selling in a given month, we're in a buyer's market. There's downward pressure on pricing. If between 12 and 20% is absorbed and sold every month, we're in a balanced market. It's not favoring the buyers or the sellers. However, if over 21% of the inventory is sold in a given month, we are in what we call a seller's market. Upward pressure on pricing. So those are the sales ratio numbers that I use to determine how active the market is. Now, let's look at overall Metro Vancouver. Inventory levels are still low. They are starting to creep upwards, but that is determining a very, very active Metro Vancouver sales ratio of 42%, well into a seller's market. Really, really interesting how this market continues to go up. Let's now look into the year-to-year numbers. The total number of listings, of course, are down overall in Metro Vancouver. Total number of sales are down, but overall for all product, the prices are up about 12%. And you can see how that's changed from our peak in April of last year at 55%. So let's look at my table that I put together every month for you. My year-over-year activity for houses, the number of homes sold is down by 18%. However, the benchmark price for houses in Metro Vancouver up 25% from this time last year. And last month, the prices jumped 4.7%, a ridiculous one-month climb for detached housing prices. Townhomes, half duplexes, volume of sales down 24% year over year, prices up 27%. Last month's change, almost 6% increase in 1 month for townhomes and duplexes, half duplexes. Condos, overall activity is up 5% year over year, prices are up 16%, and last month the prices increased 4.1%. Ridiculous numbers. There's a real mad panic over the last year. Things are just starting to slow down now, though. We're going to see that in our inventory levels. Again, looking at the sales ratio. Let's look at detached houses on the west side. We are not in a seller's market. We're in an upper end of a balanced market. However, that activity is up since the previous month at 13%. We're at 19% right now for detached houses, Vancouver west side. So we're having a little bit of a flurry of activity. Condos and townhomes, Vancouver west side, ridiculous, 44% sales ratio. That's up from last month at 34%. Condos and townhomes downtown, we're also at 42% sales ratio. Ridiculous activity, up from 30% last month. So we're seeing a real heated activity throughout the last month. Detached houses east side at 29%. That's up from 19%. Again, increased activity. Detached houses, Vancouver east side. Condos and townhomes east side, 61% sales ratio. For the east side count, condos and townhomes, crazy numbers. That's up from 53% last month. What's happening in all the burbs? Basically no surprise. For detached homes, throughout all of the suburbs, we're getting increased sales ratios, so increased activity. Apart from Mission, Langley, Abbotsford, Surrey, and Ladner, outlying neighborhoods, the sales ratio dropped. For detached houses, for attached product, you can see a similar pattern. Closer you are to Vancouver, all the sales ratios are up. However, Ladner, Surrey, Port Coquitlam, Pitt Meadows, Mission, Langley, Cloverdale, South Surrey, and Abbotsford, the sales ratio dropped. Those outer areas started to cool. Very, very interesting. What's going to happen? Well, again, we've got the three drivers. We've got consumer confidence. We're getting a little bit of burnout there in the market, but people are still motivated, as you can see by those sales ratios, to buy. The cost of borrowing, we're definitely seeing mortgage rates start to go up. I'll talk a little bit about this in a sec. Inventory levels are down 30-year lows, but we're starting to see those inventories increase. And you'll see what I mean. We've experienced an extremely busy February, but in the last week and a half of February, we started to see a little bit of cooling, not reflected yet in the stats because it has not hit the stats. Consumer confidence, rentals up, as you can see from last month. That's interesting. Employment, of course, is back up. The unemployment rate way down, which is excellent for BC and for Canada. So consumer confidence is good. We're seeing a big wave of immigration. As I mentioned to you last month, the goal is 411,000 immigrants coming to Canada. That's also going to fuel our market. But here's really interesting. As you can see, US now, we're at 7.5% inflation rate today. And in Canada, we're at 5.1%. That's up from 4.8% last month. So inflation is, of course, increasing from month-over-month numbers. Japan, they're just not spending. They're down at 0.54% inflation rate. They don't have the mad consumer spending that we're getting here in North America and also in Europe, as you can see. Now, the inflation is, of course, tied into the lending rates. As you can see, the mortgage rate forecast on March 2nd, they increased 25 basis points. They had to with the invasion of the Ukraine by Russia. That's caused uncertainty in the global market, of course, and upward pressure on inflation, supply disruptions. That's all going to cause inflation. And of course, the banks are going to have to increase the rates in order to counteract that. We don't want inflation to get out of control. Here is a 5-year mortgage rate forecast. Here's where we are now, and here is what we're going to see. Could be anywhere from 2 plus or minus % increase over the next couple of years. So quite significant at the rates compared to today. Inventory levels, we are at, of course, at a 30-year low overall, as we've seen. And what's causing these crazy prices, and I talked a little bit about this last month, we're seeing the buyers, the black line, outpacing the sellers. And when you get a ratio of around 1.5 times the buyers to sellers, you get this crazy upward pressure on pricing, and that's why the prices have continued to increase. We need that increase in inventory levels in order to get prices to stabilize and start to soften. So that's the main reason. Just looking at West Side inventory levels for houses detached, we're starting to see some increase in those. And if we're looking at inventory levels for condos and townhomes, again, we're starting to see them climb slowly. We're going to see more of that as we head into March. I know our phone's ringing off the hook to list properties. We're listing several almost every day now, which is great because the market needs it. There's such a high demand out there. Highest average price in history. There's the last graph. Look at that. Here's where we were last month. It's jumped again for an average house price in Greater Vancouver of $2.288 million. Craziness. Where have we seen that before since the beginning of history in 1977 as far as real estate history goes? So what's going to happen? Again, there's a number of factors for our pricing, our Vancouver Housing Price Index. Prices continue to go up. If we've got no tax changes, interest rates remain low, and the inventory levels stay low. If the rates go up a little bit as they are and inventory stays the same, we might see pricing sort of stabilize. But of course, if there are some tax changes federally, that budget's coming out soon. They ban some foreign home buyers. This is a big discussion now in BC. The blind bidding, which it looks like our provincial government's going ahead with, will be a negative impact on pricing. If the pandemic continues, the cooling off periods is again the provincial, banning blind bidding is federal, BC cooling off periods is provincial. If interest rates continue to increase, consumer confidence does fall. We could see that listing surge come, and then of course prices will fall. So here are the factors we're watching. There's a lot of things happening right now that are going to determine where we go. For the time being, based on last month's stats, the market continues to be overheated in various pockets. So that's my forecast. I hope you got good information out of that. Again, here's my email address if you have any specific questions. I'm always looking for more subscribers. Happy to keep you guys informed month to month. Thanks for joining me. I'm Marty Pospisil.